Bitcoin has officially seen a weekly close under the 60,000 support for the first time since breaking above 60,000 in February 2024. What are the macro and short-term implications of this? Let's go ahead and jump on in. Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at the macro and short-term implications of the recent weekly candle close. We'll also be going over the total altcoin market cap and the total market cap, as well as discussing a variety of different weekly indicators for Bitcoin. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos for Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop of cryptocurrency with Bitcoin and the relevant economic news. If you are interested in taking your trading to the next level, join us on VIP, where we post trading setups with exact entry prices, exact targets, exact stop losses, and everything you need to trade these signals effectively. We also have group chats, our general chat, our trading chart and education chat, our news, our daily video, our help, our trade setup chat. Again, the channel has been around since February 2021, a very long time. You can contact me for more information, or you can find our entire trading track record right over here, or even a detailed video explaining exactly what the VIP is and what you'll get access to. Get ahead and check it out if you were interested, and let's dive on in. So taking a look at that price action, we can see, guys, in literally 5 seconds, so we've timed it well, we will have that weekly candle close, and we can see the weekly candle close by now has definitely closed underneath three very important levels. The 60,000 weekly support, which is a very important level. We've also closed the weekly candle below that bull market uptrend. And on the daily, we have now seen a failed attempt to reclaim the 200 SMA. So a lot has happened in the last 24 hours and on this weekly close. So we have a whole bunch to talk about today. We'll get into it in just a moment. Starting on the liquidation data, 24-hour volume is up 10%, sitting at 105 million. 24-hour liquidations down 29%, sitting at 140 million. Of the 24-hour liquidations, we can see 111 million have come from long positions and 29 million have come from short positions. Moving over to the broader markets, the DXY has seen a little bit of a bounce from its local support area at 104.8. We can see again a small little bit of a bounce here. If we do see any sort of reversal, it will likely develop from this region. However, if we fail to sustain this region, we can expect the DXY to drop back downwards to our prior lows at 104. Again, while the DXY is underneath this downtrend, we are expecting a gradual decrease over time. If we break above this downtrend, we are breaking over a yearly diagonal resistance and will likely move back into this 107 to 108 region. A breakdown or a continuation lower is going to be generally bullish for risk assets, where a continuation higher is going to be generally bearish. Moving over to the S&P 500 now, we can see on the S&P 500 still a lot of strength. The weekly candle closing very aggressively over here at a price of around 5,600. We can see we are still expecting that 6,000 target. S&P 500 is really flying and soaring over here. We do not expect any sort of bearish price action unless we come back down and break below these prior high points. Again, a loss of this prior high will be the first indication of structural weakness in this entire uptrend we have seen since developed in October 2022. Again, if we look at the lows, we have our lower lows, we have our higher lows, our higher lows, our higher lows, our higher lows. If we take a look at the high points from there, in no instance did we really close and break below those prior highs. So breakdown of that prior high, would be an indication for the first time in this entire trend we have seen some structural weakness and could result in a macro downtrend. Until then, very bullish, expecting continuations. That is it for the broad markets. Like we said in today's video, we are discussing the weekly close. We are discussing the daily price action, going over a variety of important indicators. We are also taking a look at exactly what is happening on the short term, where Bitcoin is likely to go next, where are our supports, and most importantly, what the bulls will need to do to reclaim control, even though that now that is a big feat. We'll also be taking a look at the total market caps for altcoin and the total market cap for cryptocurrency in general. So let's go ahead, guys, and jump on in. A quick word from today's video sponsor before you do. Check out these exchanges. You get 15% off your trading fees for life, as well as a $5,500 bonus by completing a few tasks. So check them out, we'll play an ad, and we'll get back into our video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay guys, let's go ahead and get stuck into it. So as we can see, we have had that weekly candle close. So by technical definitions, Bitcoin is now out of a bull market. We have officially lost this macro uptrend. We have lost the 200 moving average. We are officially out of the bull market. Are we in a bear market as such? By definition of a 4-year cycle, by definition of cyclical patterns, it is hard to say for sure because we did not see a traditional 4-year cycle bull run. It is unlikely we are going to see a traditional 4-year cycle bear run. What we are looking at the chart from now, we are trading it on a level by level basis. We were in an uptrend and now we are in a downtrend. So we need to discuss the trigger points to re-enter uptrend and of course the potential lower targets of support where the price action could move towards or even reverse from. So this is going to be our weekly chart. We can see we've actually broken down from this uptrend level. With that breakdown, we have now validated that weekly close under the RSI, again indicating a fair bit of weakness over here in terms of momentum. So when we're looking at our next targets, we're going to be looking at our VRPV ranges. We can see immediately we have the VRPV on the right-hand side. And what I might do actually to make this a little bit more visible, I might increase this to about 60%. Let's see if that is easy to see. Perfect, that's a lot easier. What we can see here in the VRPV, and the VRPV is a representation of historical horizontal order zones. So it is a representation of volume on a horizontal scale in history, in the past, okay, and it's past price points. What we can see from this red line was going to be our sell side liquidity. Our sell side liquidity being that 56.6K level. We talked about how it was absolutely significant or paramount that we were able to close a daily above that level, and we failed to do that. We came back down and we closed underneath that level. If we take a look at the VRPV, and you have to excuse my voice, I actually am quite sick still today. If you look at the VRPV on the right-hand side when it loads up, you'll notice that that level lines up with a pretty significant peak on the VRPV. And what happens is after that point, we can see the VRPV starts to drop. It starts to reduce into the next valley, and that valley is sitting around 53,000. This tells us that 53,000 is going to be the next area of support for Bitcoin. It is likely that we still are going to be testing that 53,000 area of support. If we zoom into a daily candle, onto the daily chart, we can see yet again, if we zoom into that 53K region, we can see now that area of support, a massive peak on the VRPV. So again, if we go ahead and draw our horizontal regions in, we can see this area of support right over here is going to be that next likely target for Bitcoin. This is where we are expecting Bitcoin to move towards while it remains underneath the 200 SMA. So provided Bitcoin does not reclaim the 200 SMA, that is where Bitcoin is likely to move toward next. Are we going to continue lower than that? We don't know that yet. We have to come down and retest this region. Remember, we are trading now from a level by level basis. We don't have historical data in terms of cyclical patterns in regards to where we are at in this current cycle. So we have to trade level by level. We are expecting a correction down to 53 to 50,000. It's a possibility. That is where the VRPV suggests. Will we go lower than that? That's something we have to assess as we reach this area of support. Are we going to continue higher from here before retesting that? We'll talk about that on the short term. So all in all, guys, the weekly candle close was obviously a bearish close. It obviously wasn't a good close. We saw a close under the bull market uptrend. We saw a close under the 60K region, and we saw a close under that 200 SMA on the daily. Let's talk about a bullish indication. Let's talk about one bullish thing we are seeing on the charts over here, and that is going to be our bull market support. Our Bollinger Band retest of our low side. What we can see here is the Bollinger Band is a representation of volatility. That is generally what it represents, overall volatility. What we can see is generally when we reach the top of Bollinger Bands and the bottom of Bollinger Bands, we see short-term reversals, or sometimes which leads into macro reversals in the price action. So again, what we're seeing over here, we are seeing a retest of the low side. Now there are periods, such as this period of capitulation, where we see extended downward price action along the lower band of the Bollinger Band, and this period of massive increases in price action, where we see expansion, where we see periods of time where the price action hugs the upper band of the Bollinger Band. But when we're looking at general range to range movements, we generally do see the price action bounce between the lower and the upper bands of the Bollinger Band. So if we wanted to give a point to the bulls, we are retesting the lower band of the Bollinger Bands. This could potentially mark that we are coming closer than expected to a reversal. And again, we do have a very, very, very close support level at that $53,000 region, which might act as an area of support, something to keep in mind. Let's go ahead now and jump over to the short-term charts and discuss what is happening. So this is our short-term chart over here. As you can see, we are re-entering that low historical volume resistance range. It's the range right over here on the VRPV. We can see we do have a downtrending level of support on the price action, making its marks as 3 retests on the prior liquidity wicks. This is going to be an area of support for Bitcoin, and a likely area we will be coming down towards. So if we have to expect a directional move, we are expecting moves towards this area of support, greater than, more than, we are expect continuations higher. We do expect continuations higher again for Bitcoin if we are able to break above the horizontal resistance at 58.3K. The 58.3K resistance, as we discussed in our prior video yesterday, is the short-term trigger for the price to reattempt to retest the $63,000 region, and a 63 retest and breakthrough is what is required to send the price action back up to these equal highs. So again, right now we are definitely in that bearish territory. If we break back above here, it becomes slightly more bullish. If we break over here, it becomes very bullish. And then of course, if we break above 72, we are going to new highs. So that is it for the short-term price action. Again, we don't want to go too much into detail today. Keep it nice and short and brief, discussing the key levels and the current directional trends. If we break below this region again, that is something we'll have to discuss if it happens. If we do see a loss of that level, we could potentially see a retest of the POC at 44. However, I would not expect this to occur while we remain above 53 to this $50,000 support region. Remember, support is support until it is not. So right now we have lost our diagonal. We expect a retracement to our horizontal to fill the rest of that VRPV gap. From there, we expect reversals to develop, unless proven otherwise. So right now, that is what is expected. Let's go ahead and jump even down to an immediate price action. So jump down to the hourly chart and take a look what is happening. So as we can see, this was going to be that local area of resistance. We had to break above our sell side liquidity. This was our local area of resistance. You can see Bitcoin has failed to do so on the short term, resulting in that downtrend developing. Again, we can see a box of liquidity down at that $5,000 region. That is going to be the potential target of Bitcoin to create a double bottom, or even a potential bullish or hidden bullish divergence to see a continuation back upwards. But I would not be too expecting of a bullish case scenario until we break back above that region. If we get back above that region, we then expect a continuation to potentially retest these prior highs at 63 and then even higher. If we do see the loss of this liquidity box, that is going to trigger another continuation downwards for Bitcoin. As we saw over here, we are seeing a very similar pattern, right? We saw this breakdown, we saw a slight build up into equal resistance, okay? And then we saw a retest of the sell side, a breakdown and strong continuation. So we're seeing that same thing happen, a breakdown, creation of the sell side liquidity, a retest of those equal highs, and we're coming back down to retest it. So we see the breakdown of that sell side liquidity. We could see another leg down for Bitcoin. However, this area is still going to be an area of support, and we could potentially see a reversal develop from there. Let's go ahead now and jump over to the total markets. So jumping over to the total cryptocurrency market cap on the left, we can see we have retested, right? We have retested that critical area of support, which is sitting at the 1.95 to 1.88 trillion dollar support level. We can see again, as per that VRPV gap over here, we are retesting that gap now, an area of more increased volatility into our peak. This is going to be our area of horizontal support, which we did retest for about, we're looking at about a week and a half before we saw that strong continuation upwards. Furthermore, what we can see is we do have somewhat of a descending channel formation. We have got equal highs over here, and we have got our lows on the bottom side. With that, we can see the midline of this channel is more or less respected. We have seen double retests and bounces from that midline. We saw rejections from the midline, which resulted in retests of range low. We saw a breakthrough of the midline, which resulted in a retest of range high. We saw a rejection from the midline, which resulted in a retest of the range low. So we know this is some sort of structural formation which is being respected as we speak. So worst case scenario, we could see that total dip one more time into support before we attempt to see a reversal develop, which would go ahead and support the theory that Bitcoin could see one more dip back down into that $5,300, $50,000 range, before we see a potential reversal attempt to develop. On the total, if we do break below this region, similarly, if we break below this region on Bitcoin, the $50,000 region, we would expect a continuation lower. We would also expect the same reaction on the total. We would expect a continuation to that prior area of support. Remember, if the total gets to this region, Bitcoin gets into the 40K region. Okay, moving over to the altcoin market now, we can see the altcoin RSI has dipped into that deviation range, actually dipping just below it. Again, the altcoin market is quite easy to predict right now because we do have this chart. We are looking at a breakout of this downtrending RSI, which has been the downtrend in momentum since the beginning of March, to indicate that altcoin strength is coming back into the market. So when we see that trend line break, that would be a great indication, that altcoin strength is coming back in, and we could see altcoins start to reverse. From a structural perspective, we do have that respective downtrend. Again, retests and continuations, retests and rejections, breakouts and continuations, breakdowns and continuations. We have that equal pattern over here, about 4 points of retest on each side. Our fifth point generally being a potential breakout point. With that, we are also retesting our horizontal level of support. Again, that level coincides with the total support and coincides with the horizontal support for Bitcoin. If we do see a breakdown of that region, we would expect one more flash correction to around 460 billion for altcoins. And if we lose that level, we would expect a macro continuation downwards again. We would expect that macro continuation downwards for total and that macro continuations downwards for Bitcoin. So we can see how all these charts are similar and are lining up from a macro perspective. So that is its price action, guys. The weekly candle close was fantastic. The implications of macro are more or less unknown from a cyclical sense, because again, the 4-year cycle hasn't been necessarily broken, because the 4-year cycle is a representation of what's a date range trend, right? It only cares about the specific dates between lows and tops, lows and lows, tops and bottoms. That's what it really cares about. What happens between those dates is up to the market and up to economic factors. It's up to a lot of things. As humans, we have seen historical technical patterns play out in prior cycles, so we like to assume that they will play out again. However, they might not necessarily do so, and in this cycle, we have seen deviation from those historical patterns. We will then infer that the deviation from historical technical and structural patterns would result in deviation from the date range trend. However, that is an assumption. So we don't know if the 4-year cycle is necessarily broken, but what we do know is that the historical patterns we have seen develop in prior cycles and the way of which we've moved in prior cycles is not playing out in this particular instance. So therefore, we could see massive deviation from the 4-year cycle, but that is only speculation. So thank you for tuning in, guys. Have a fantastic day. Again, forgive me, I am still quite sick, but we'll see you guys in tomorrow's video. Hopefully, I'll catch you then. Bye.